Good evening, ladies and gentlemen. This is Greg Michalowski from FXDD, and this is the Wednesday, March 17, 2010 New York Evening Forex report. Before we get started, I want to remind everybody that trading Forex is risky and should only be done with risk capital and not change your lifestyle. Traders could lose all their risk capital trading FX. FXD does not guarantee any recommendations made within its commentary. Traders should make a market assessment, take trading positions based on their own personal market risk analysis, risk tolerance, and financial condition. In addition, care should be made to only use leverage which is congruent with your personal risk tolerance. Although care was taken in creating this report, FXD does not guarantee the accuracy of the information. If the market today had its ups and downs. I don't really want to start with that Euro Swiss. I want to start with the Euro versus the US dollar. And what I want to look at here is the market's movements here in the Euro dollar. We started the market moving higher. We closed yesterday at 137.65. The market moved up to new highs at 138.17. We also, when the market failed at that level, we broke through this 137.96 level. That was the old high for the currency pair. We also broke through the 75 level after using it as a support level here, 137.75, and the market moved down to test the 100-hour moving average around the London close to the 12 p.m. London fixing. From there, the market moved back up to our key 75 level. And I'm going to zoom in here just to show you how key this level is, or how this level is setting up as a key level. You can see we have a number of different highs there on the hourly bar, including during the last session here, where the market got up a little bit above that level and then started to use it as resistance back to the downside. But on the downside, we do have good support against the 100-hour moving average. We had good support there against the 200-hour moving here. We couldn't confirm the bearishness below the 100-hour moving average here, finding support, not able to close an hourly bar below that green line. That gave the market the impetus on this move right here above to move the price back up to the upside, in which we did. So from this move right here at around 136.80 all the way up to 138.17, a nice move to the top side until the market started to retrace here. Now we have the 100-hour moving average moving even higher, and we're coming to test this twice here today, and we'll see how the market reacts here. Where if the market is able to move back below this 100-hour moving average here in this evening session, we should see a further move down toward our 200-hour moving average, and we'll see how that all plays out. If we break through the 200, then the market starts to move lower after failing to really hit our targets in the Euro versus US dollar, which I have on the top side going up to 138.50 to 73 in that as a top side resistance. That levels come from the daily chart in the Euro versus US dollar. I'll go to it just to appease you. This corresponds the top side targets with these lows from over here and this 38.2% retracement of the move down from the January high to the low that we saw here in March. So that would be 38.2. That comes out 138.73, and this low is in 138.51. So that would be our target on the top side for the Euro versus US dollar. If we're able to get back up, to get back above what I think is a key resistance in the Euro dollar, which is at this 75 level, get through that level, then we should see further momentum to the upside for the Euro versus US dollar. That's my story for that currency pair. Let's go to the sterling versus US dollar. The story for that has been higher employment that forced the market up higher here today. We peaked out at the what level would we peak out here in the Euro dollar or sterling versus US dollar around the 153.79 level, and the market started to come off of that peak. The actual high was 130.53.80. But anyway, let's go to the 5-minute chart. You see the market hit that 80 level, and then it came down 61.8% of the move up here today, up to the 152.74 level. That was kind of unusual. I expected the market to find support in this area. It didn't. It went down all the way to this area, and then started to move back up to the upside. And when it moved to the upside, it did another thing that I didn't think it would do, and that is get through these levels here. These tops right here, this top right here, and even this top right here. It went through all three of those tops on its way to the upside here. When the market failed up at this area right here, the market did start to come down and break back below this level right here, and we even got below the 100-bar moving average on this 5-minute chart. But look at the development here. We have this trend line here connecting these two lines, and we came down, tested this 38.2% and the trend line right here, and now we're back up trying to get through the 100-bar moving average on the 5-minute chart. If we're able to get through that, then we may see a further move to the upside as this trend may be starting to continue here. What we have to be careful though is that we are forming a triangle here, so we'll be watching the top side resistance against this level right here, which comes in at 156, 150 to 153.63 on the top side to make sure that we're not in this triangle. We have to break up to the upside in order to move higher. The dollar versus yen, what we're going to be watching here tonight is the 100-day moving average. That 100-day moving average currently comes in at the 90.08 level. We'll be watching that level very closely. Taking a look at the hourly chart, we came down through this 100 and 200 hour moving average, and the market moved sharply lower down to the 50% retracement. What's that the 50% retracement of? I'm going to have to zoom out here and take it from the high that we reached here in February to the low that we reached here in March. Off this is the hourly chart, and the retracement level of that move, or the 50% retracement level, comes in at 90.13. We also have support at 98. We also have support at 90.08. Again, that's a 100-day moving average, and we'll be watching that closely. Looks like the market's not going to close below the 90.08 level here today, not below the 100-day moving average, which is good news for the dollar versus yen. But we're going to have to get above these moving averages, and also the other key level to get above if this market is going to move higher is this area right here. This is the 90.72 area. We had highs there, and we also had highs here, highs against here. So this area in this region right here is going to be a key level to get through on the top side in order to move the dollar versus yen to the upside. Where do we go if it moves higher? That would be the target up here at the 91.75 level. That's a 200-day moving average on the top side there for the dollar versus yen. Watching this level and looking for a move through the 72 level in order to confirm moves to the upside for the dollar versus yen. Dollar versus Canada got hit here today. This is the daily chart, and we made new lows coming down to, I can't even read that, but I'm going to have to go to the hourly chart. Different hourly chart, and take a look at this. We went down to about the par 74 level, and that if you go back to 2008, last time we were at this level, the par 74 level was a key level, or actually a 73 level was a key level for the dollar versus Canada. I put it on a blog at forex.fxdd.com. That's http forex.fxdd.com. That's where you can go and find our commentary, see the chart of what the market looked like back when the dollar Canada was back at this level, and that's where we found support. We're back above this old trend line. 1, 2, we held it here and then fell down through it. We're back above it. That gives it more of a positive slant. Perhaps we're going to have buyers against that level, buyers against this moving average or this trend line. If we do, we should see further moves to the upside with a potential test of the 100-hour moving average at 101.79. Dollar Swiss, we tested to the 200-day moving average here at the 104.93 level, got to a low of 105.06 on a couple of different occasions here, or near occasions here for the dollar versus Swiss. We reached down here around the 12 level and then reached down to the 05.06 level, and the market has bounced back up. It's currently trading at 105.43. That's positive in that the market was able to move from that. The Euro Swiss is also trying to bounce. Euro Swiss has been moving down ever since the Swiss National Bank allowed it to, by saying they're only concerned about a sharp strength in the Euro Swiss. They haven't come in yet to address this situation of the move down here. Maybe they will tomorrow. Maybe we'll see a bounce back up in the Euro Swiss. Maybe we're seeing that play out in the dollar versus Swiss currently at the moment, and that's why we're seeing the dollar Swiss bounce off that key level. So we're watching that. Let's go to the Aussie versus US dollar. That continued its move to the upside here off of the daily chart. Taking a look at the hourly chart, we had a nice move to the upside as well in that currency pair. But at the 5-minute chart, showing a little signs of topping here. We're back below the 100-bar moving average. We're going to have to get above that level and or test the 200-bar moving average here at the can't find it. At this level right here, we're going to have to test that level right there around the 92.16 level, and we're going to have to get above the 100-bar moving average around the 92.32 level in order to push the market back higher. But overall, the hourly looks pretty good, well above that, and the daily looks pretty good above that level. We're going to have to get we're going to have resistance up here at the top. In fact, we do see trend line resistance kind of slowing the move down at the 92.56. So look for a move through 92.56 in order to confirm the upside. That's it for today. Wish everybody a good night. Bye bye now.